Good afternoon, everyone, and welcome to another edition of our Friar Financial Forum, where we are bringing a couple of different segments to you: markets in motion, finance in focus, and our wealth wisdom workshop. Last week, if you can recall, we tidied up our series on the $100,000 tax-free retirement, how to put that together. So this weekend, wealth wisdom workshop, we're going to follow up on that concept and actually show you how to actually fund those accounts and in what the proper order is to fund those accounts as you're moving forward. So before we get started, as always, have Jeffrey Campbell here as well,
Mm.
and he is going to get us started with the markets in motion segment.
All right, I appreciate that, Marcus. So let's jump right into the markets. And so it was a rough week across the board, kind of as investors tried to make sense of the new conflict in the Middle East and some mixed signals from the jobs market. The S&P 500 slid just over 2%, and the Nasdaq was down a little more than 1%, and then the Dow took the biggest hit, dropping just over 3%. And internationally, even tougher. Developed overseas markets fell more than 6% for the week, so a tough week. And then this week started with a jolt. Open was all red as headlines about military action hit before the bell, but honestly, the buy the dip crowd showed up fast, and by the close, most of those early losses have been erased. And then Tuesday, it was like deja vu, another lower open, more questions about how long this conflict could drag on, but comments from the White House about providing risk insurance and Navy escorts for tankers helped calm things down a little bit. And then by Wednesday, we actually saw a little bit of momentum. Tech stocks bounce, oil prices steady, and then a surprisingly strong hiring report from the ADP gave markets a nice little lift. And then for a moment, it looked like the week might turn around, but then that optimism didn't last long. As that week went on, concerns about the conflict widening kind of pushed the markets back in the risk off mode. So, and then as we kind of get into the jobs report, Friday hit with another curveball. The latest jobs report showed the economy lost 92,000 jobs. Not at all what the economists were expecting. On top of that, we got word from some oil fields in the Middle East. We're cutting production because storage was filling up, and that added even more uncertainty to an already tense situation. And then speaking of oil, that was the big headline of the week. U.S. crude jumped 36%, and that's the biggest weekly gain since 1983. With tanker traffic in the Strait of Hormuz basically at a standstill, the market is now watching kind of to see how insurance companies adjust the rates, and that could have a ripple effects across the entire energy supply chains. Some interesting stuff. A lot of turmoil, but we're figuring it out.
Yeah, absolutely. Gosh, I had to go to the gas pump today, gas station, and I filled up Sunday, and it was 4.24 a gallon, and today is
Mm-hmm.
what, Tuesday, and premium was 4.44 a gallon.
Mm, 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 mm.
So it's rising quickly.
Yeah.
All right, so let's shift over to finance in focus and kind of take a look at what's going on this week. So economic data this week. Let's see what we've got going on. Tuesday, small business optimism index and the existing home sales. So we'll look at those. Wednesday, we'll get the latest consumer price index. Um, that's always a big one, along with the federal budget update. Thursday is packed with jobless claims, the trade deficit, housing starts, and building permits all hit the table. And Friday kind of wraps it up with a heavy batch, the first revision of the fourth quarter GDP, anywhere is inflation reading, durable goods, job openings, and consumer sentiment. A lot of these are delayed because of the government shutdowns. A lot of those reports are a little bit lagging simply because of the government shutdown. Earnings this week on deck that are light, Oracle and Adobe. So that'll give us some tech giants weighing in, and we'll see what the market thinks about those. So, of course, we're still watching oil markets pretty closely, not not just for the prices, but because of the supply chain impact. Because that can steady. Eventually, that's going to get to the grocery store and all things. Your airline tickets, just all those things are going to, of course, weigh in with this pricing of the oil. That leads us into our wealth wisdom workshop for this week. So again, we're going to talk about that bucket strategy and your financial order of operations. So just like we had order of operations when we were in math, you had what, parentheses, and then what, multiply, divide,
Yeah.
addition and
Hmm.
subtraction.
Yep.
So we've put together kind of a similar formula to help you guys out. So Jeffrey's going to take that away in the Wealth Wisdom Corner this week.
Yeah, I hadn't heard PennDOS in a while, so I froze a little bit on that one too. Yep. So as Marcus said, welcome to the Wealth Wisdom Workshop. And like just to recap, each week we kind of take one financial concept and break it down with clarity, confidence, and purpose. And today we'll be diving into something that every household needs, and that's a simple, repeatable order of operations, like Marcus said. So to kind of build wealth. And your money has its own little waterfall game plan. You fill up your buckets in order, and the buckets closest to the stream get that cash fast. So this is all about creating structure, reducing stress, and giving every dollar a job. So let's walk through the 6 buckets and what they are and why they matter and how they work. So bucket one is your emergency fund. We're always going to put your liquidity first. And what that is, we like to do a high yield savings account, holding 3 to 6 months of living expenses. So you have that money ready to go when you need it. The characteristics of that means we're highly liquid, so you can access those funds quickly. FDIC insured up to the applicable limits. There's no market risk in that. And then interest rates fluctuate, but the goal is stability, not growth. And then why that matters is life happens, job loss, medical bills, car repairs, anything like that. Liquidity is your shock absorber when those type of emergency situations happen and you need that money quick. So liquidity is always going to beat tax breaks. And then we go into your bucket two, which is your employer match or the free money, which we all like to hear those words right there. So a traditional or Roth 401k contribution up to the amount your employer matches. And then the characteristic of that is an immediate 100% return on matched dollars. Contributions come from payroll, and then investments options vary by plan. Tax treatments depends on traditional versus Roth as well. And that matters because skipping the match is just simply leaving money on the table. This is the highest impact, lowest effort wealth builder available to most workers. So take advantage of that free money. We don't get many opportunities to say that, so take advantage of it. And then we go into bucket three, which is your Roth IRA and your 401k. That's your tax-free growth. Your Roth IRA, your individual account with tax-free growth and your tax-free withdrawals in retirement. And then you have your Roth 401k, which is your employer-sponsored Roth option with higher contribution limits. And then the characteristics of those is just contributions are made with after-tax dollars, qualified withdrawals are tax-free, no required minimum distribution, so no RMDs for Roth IRAs, and then broad investment flexibility in IRAs compared to your 401ks, to your taxable account. So, and then that matters because it's tax free, and that tax free compounding is powerful. These accounts is what give you flexibility and control over your future tax bill as we get closer to retirement. So, then bucket four, you got your HSA or your health savings account, and a health savings account are paired with a high deductible health plan. Is what we're looking at here. And then the characteristics of that is triple tax advantage. I know you've heard that said that a lot in the HSA episode. So you got tax deductible contributions, tax free growth, and tax free withdrawals for qualified medical expenses. And it can be invested just like a retirement account. And then once you become 65, it becomes a traditional IRA for non-medical withdrawals. So it follows the same rules as a traditional IRA at age 65. And that matters because healthcare is one of the biggest expenses in retirement. As you get older, that kind of bill can go up. And HSAs help you prepare for unmatched tax benefits. So take advantage of that as well. Then we get into bucket five. You want to max out the remaining tax advantage space. So any additional 401k contributions, traditional or Roth, your 403b, your 457, or your TSB contributions, depending on your employer. And then the characteristics of all those include high annual contribution limit, so you can put a lot into it. Payroll-based investing, potential employer profit sharing, and then tax deferred or tax-free growth, depending on what type of account it is. And these type of accounts is where the high earners and the disciplined savers accelerate long-term wealth. So kind of once you start getting into the higher tax brackets, making a little bit more money, that's where you take advantage of that the most. And then bucket six is your taxable brokerage account. That's where we get our flexibility and optionality. And that's just a standard investment account with no contribution limits and no withdrawal restrictions. So you can add as much as you want to and take as much out whenever you please. And then the characteristics of that, capital gains do apply when you're when you're looking to withdraw that money and having that money in that account. Then you have unlimited investment choices, so that's where we get the flexibility from. No income limits, and then full liquidity. So, like I said, you can pull and take as much as you want to. And then this bucket is what gives you flexibility. So for early retirement, home purchases, business opportunities, or simply just building wealth outside the reach of future tax law changes, as your document notes, these keep things flexible because who knows what Congress will cook up next and what laws might change down the future. So that flexibility is important. So and then just kind of at the end of the day, the bucket strategy isn't about perfection. It's about order. It's about giving your dollars a clear path so you can build wealth with confidence and reduce that financial stress that we all deal with. When you follow the buckets, you can create margin, you can create options, and you can create resilience. And that's what the Wealth Wisdom Workshop is all about. Actionable guidance for building wealth that aligns with your life. So that's what we're looking to give you guys here.
Absolutely. That was great job. Great job there. Going through those buckets in the proper order. So you fill up,
Hmm.
as you get raises, you fill up a bucket. As you pay down debt, you can then fill up a bucket. And the ultimate goal is to get down to bucket six. And then once we can start to put monies in bucket six, that's when you're going to create that powerful wealth building where we can execute that tax free retirement strategy that we talked about over the last 5 weeks. So that's it for this week's episode. Again, looking for you all's comments, concerns, anything you want us to talk about. We'll can shift over probably to protection for the next series and delve down into insurance strategies again. But that's it for this week. Stay tuned because we got a rocky market, and we're going until this war is over. We'll be who knows? But
Hmm.
yeah, we just repositioned client accounts today. So we had monies that were overseas. We had to bring those monies back. We let them work a little bit overseas because those markets were doing well over the past weeks, but not so much now. So trying to control that risk. So at any rate, stay tuned, stay adept, pay attention to your policy that's going on, and we'll see you next week in the Wealth Wisdom Workshop and for our Financials Financial Forum. Everyone have a great week. Thank you.